Traders, looking at gold currently on the weekly time frame. If we look left, and I mean as far back as you want to go, every time this rallies, okay, pick up the low to the high, you can see the pullback even here. Right? No matter where you want to go with this, pick up a low, pick up a high, and you'll see that it pulls back generally into equilibrium, meaning that it'll pull back roughly 50% of the previous price swing. Okay, this one here, low to high, retrace, pick up a Fibonacci, low to high, retrace into the 50 to 61.8 fib level. Right, so we'll just go from this red candle up, picking the low to the high, fib retrace, okay, low to, well, up into the high here, and you can see how it pulled back down into 50 to 61.8. That's my optimal entry zone. So if we were to apply the same thing here, low to high, I'm looking at a potential pullback down into 50 to 61.8. Let's just do the same thing on the daily chart, see what that looks like. I'll just clear everything. I mean, look, we could go back, but yeah, I mean, everywhere you want to go, you know, if you pull a swing low to swing high, you generally get a decent pullback on the daily, like even on this chart. Have a look at these daily candles, for example, low to high, you know, daily candle, it'll pull back. You know, there's a pullback down in here, for example. Generally speaking, you're going to get this jigsaw, well, the zigzag, I guess you could call it, you know, low, high, pullback, low, high, pullback, you know, higher, high, higher, low. So I'm looking for the same thing now. We don't have, I mean, we've had this rally, and we haven't had a decent pullback anywhere through this price range, right? And the other thing, I'm always looking at the previous price range. This is the range that we're currently operating in at the moment. This is the trading range. Right, if I was to pull a fib, this low to high, right, it brings me into this level down in here. So look, it may or may not pull back this far, but at least consider the possibility. Well, I mean, you know, I need to see it pull back into at least 50% of the previous price swing. Then again, like, look, it doesn't necessarily happen. I mean, back here, for example, swing low, swing high. Okay, it didn't quite reach 50. Right, that might be the case. So we can look at this level here as a point of interest. Okay, that would be support, and this 50. So this would be my optimal entry zone through here for a buy, and I'm thinking even a counter trend short might be the play. So how to get involved with this, I'll go down the time frame and have a look at this from a trend perspective. So we've had this trending like so. Okay, so now we're starting to see a little bit of a pullback here. This area down in here is my target area, potentially. There's a couple of things that the market is seeking. One, it's looking for liquidity, and number two, it'll look to rebalance. So if you look at this, the liquidity build-up is all through here. So we've got a lot of traders buying, and their stop losses are getting placed under. Right, so there's a huge build-up of stop orders, sell stops resting all through this level under here. So that's a target for big money to push this back down, to unload up here, and consequently push this back down to soak up these sell stops, right, and then possibly get ready for another bullish run. Right, so that's one thing, liquidity. Now there's very thin liquidity, if anything, above here. The only liquidity above here would be these buy stops if traders are starting to sell. So it just makes sense to me that this pulls back down into these lower levels here. Now, the other thing that we need to see is the market rebalancing. So if we have a look at this thin candle here, it's one-sided trading. From the candle on the left to the candle on the right, okay, we've got this fair value gap, bullish imbalance. So it's one-sided trading bullish. The market seeks liquidity and it looks to rebalance. So this is an ideal target for this to pull back down into rebalance and to eat up these sell stops. So that's how I look at this. So you could possibly look for a counter trend short. Right, this is starting to potentially shape up, but I'm more interested in actually buying. But the thing with gold is it can be incredibly volatile, and I mean, you just don't know how far it's going to pull back. Sometimes, you know, you see these really wild swings, so don't underestimate how far this thing can move. Right, there's a possibility it really dumps, and then and also we've got a lot of conflict and chaos in the markets at the moment with the political situation. Trump makes a decision about tariffs, and the markets react on the back of his tweets or posts on X. So it's a really volatile market. So just be careful. So the next thing for me would be to go down to a 15 or 30 or 15 minute chart and just plot the trend. And simply put, you can just grab a parallel channel, run it through, right? There's a trend. On the 30-minute, we're getting a shift in structure here, change of character. We've had a little bit of a rally, the range-bound trading through here. Just be careful, because if we're going to see a significant drop, I would expect to see, let's just mark this up, so we've got this range through here. I would expect to see something like this. The range, a bit of a fake out drawing in sellers, and that sets up buy stops. They run those stops and then we get the move. Right, and I'm just going to go back and show you an example of that right here. Look, see? Okay, that was a pretty significant move, right? So this is the chart pattern or the price action that I'm looking for. This one, we didn't get much of a downward move. Okay, it sets up the range. That move here would have invited more buy stops. This one here definitely would have enticed sellers back into the market, so that this build up of liquidity occurs, and then the algos run the liquidity. This is big money. Look, the basics, a very basic Wyckoff setup. Okay, the range, the spring, right? It runs the liquidity, and then we get the move, and we get this move with speed. It creates a displacement, pulls back in, rebalances, right, and then we go. So I'm looking for a similar setup, possibly over here. Now we don't have the run above yet. You just want to be a little bit careful. Look, that's my take at the moment. If it does run above these highs, I would then consider that a lot more capital is invested in shorting this. So that could mean we see a decent move. So possibly we see it run a bit further. But stick with the trend while it's trending. Oh, that's not really working. But you want to watch this shift here and set up a follow the trend basically. If it starts to trend down, we just follow it like that, and then it breaks structure. When it breaks structure bullish, we can look to get long. Okay, so I'm looking for this to look. Can it hold here and continue up? Yes, it can. Right. There's no run on liquidity above here. We've got a run below it. Okay, we've got a bit of a dip down into these stops. That could be enough to push this further. So you've got to be really, really careful, guys. The only way to get involved with this short is to wait for a break of structure. And what I mean by that is it does something like that. We get a break of structure here, and look, it comes back. It retests the range, right, and then we see it start trending. So just keep an eye out for that. If that doesn't shape up, then there's no trade. But that's the kind of thing that I'm looking for at the moment. Look, that's my take on gold. I don't want to buy at a premium. So this is the thing. See, let's just go back to the 4-hour chart. Have a look at this previous price swing, right, from the low to the high. There's 50% on the Fibonacci. Anything above this is at a premium, right? I don't want to get involved long at a premium. I don't want to be buying up here. If it pushes up and leaves me behind, okay, I'll wait for the next opportunity. And what I mean is a decent pullback. This level here is equilibrium. Under here is discounted, right? So I want this to pull back down here before I get long. In fact, let's just take that out, and that would be my point of interest, getting long in a discounted zone rather than in a premium zone. Anyway, guys, look, that's my take on gold. I'd really love it if you left a comment below, share your thoughts, tell me what you think, and safe trading, and I'll see you in the next one.